3.8 and 3.9, and I have them pretty much set up for you. Hopefully you are familiar with spreadsheets. If not, you're gonna learn that skill in this class. What we're really doing is we are digitizing the working papers. This is definitely not computerized accounting. We're not using accounting software. We will later in this course, but we're just taking those traditional papers that have been done by hand and we're putting them into spreadsheet form. I will have this template is a link for you. You've probably already brought it up, but it's a link for you in my big campus, and you will create your own sheet from a template in Google Docs. Okay, so when we look at problem 3.7 on page 69, what we need to do is we need to look at each of those transactions and we need to identify the accounts that are affected. We need to then classify those accounts. Are they a part of assets or liabilities or owner's equity? We need to determine, do these accounts go up or down? And then lastly, we need to make sure that we remain in balance. And I'm going to show you how to put a formula in there. And so why don't we go ahead and under transaction, I'm just going to go by the date. So the first date is January 1. You can put your date in there however you want. I guess it's going to mark it January 1st, 2012, which is this year, but that's fine. Anyhow, so number one, Regina Delgado, the owner, invested $25,000 cash in her business. So if she invested cash, cash is going to go up. And if the owner's investing money, the owner's equity or the owner's capital account will also go up. I'm going to go ahead and highlight all these cells and make them a $sign. There we go. Okay, let's go ahead and look at January 4th. We bought car wash equipment with cash. So that is January 4th. We bought car wash equipment. So if we buy car wash equipment that is worth $12,000, we are receiving that. That is an asset and that will go up. However, we are using cash to pay for it. So if we use cash to buy something, that cash account is going to go down. So I'm going to put a negative sign in there. That cash account goes down. Let me see. Sometimes I know in Excel numbers it'll let you do something called, it'll make it be a negative number. Well, let's go ahead and just leave it with the $sign. Anyhow, you can see that's negative. January 5th, we purchased on account $2,500 of office equipment. So we bought things on account. So when we buy something on account and we're going to owe someone money later, that is a liability, okay? On account, when we buy something, is accounts payable. And so our accounts payable will go up, our liabilities going up because we owe that money. That's $2,500. And then because we're receiving office equipment, we're getting it, office equipment will go up. So take a look at office equipment. I'm sorry. Yeah, that's office equipment. I put it in office furniture. I should not do that. Okay. Because office equipment and liabilities are on opposite sides of the accounting equation, they both go up. And that's okay because they're going to remain in balance. I'm going to show you how to do that in a minute. Because our first two transactions, or I'm sorry, our first transaction, that was also on opposite sides of the accounting equation. So we remain in balance. Our second transaction was on only the blue, the asset portion. So to remain in balance, one went down where cash went down and one went up. Okay, let's move on. January 10th. We wrote a check for the monthly rent of $800. Okay, so what is rent? Rent is an expense. Okay, so is an expense any part of assets? No. Is it a liability? No. An expense is something that affects owner's equity. An expense makes owner's equity go down. Okay, it's a bad thing. We like to have a lot of owner's equity, but expense makes it go down. So if it makes it go down, that rent is going to be a negative number. And it says we wrote a check. So that's coming out of our cash account. If we write a check, we're giving someone cash, that goes down. Again, on opposite sides of the accounting equation, so we're in balance because we both go down. Okay, let's keep going. January 12th, received cash for services performed. So we received cash. Someone's given us $1,000. What are they giving us $1,000 for? We performed some services, and that would be a form of revenue. And revenue is part of owner's equity, part of capital. When we sell something, whether it be a service or an actual product, we generate income, we generate revenue. That makes capital go up, and that makes sense because, again, we're on opposite sides of the counting equation, and if owner equity goes up, then that makes sense that cash goes up. Okay, January 15th. Okay, our owner decided to take money out of the business for personal use. So she looks like she wrote herself a check for $600. Cash goes down. And when an owner takes money, it's going to come out of a withdrawal account that's part of capital. So I should have made that a negative, right? Because she's taking money out. So if an owner takes money out for personal use, that capital account's going to go down. It's going to lower capital. Okay. January 20th. Purchased a desk for $1,000. Okay, this one's going to be complex. Purchased a desk for $1,000, paying $200 cash and agreeing to pay the balance of $800 in 30 days. Okay, so let's break this up. First, we got a desk. So that's part of office furniture, and that desk is worth $1,000. So we're getting an asset worth $1,000. Next part, we paid $200 cash. Okay, so we wrote a check. Cash has to go down. Right now, let's take a look at this. What is our net effect of negative 200 and positive 1,000 on our asset side? That net effect is a positive 800. So we're agreeing to pay the balance of $800 in 30 days. So that's a liability because we owe someone $800. So that would make sense. I'm going to put a positive 800 there. We'll put our formulas in to prove that we're in balance. Our last transaction is January 25th. And we provided services worth $600 on account. Okay, so we sold services. Okay, so that's going to make our capital go up, and that amount is $600. And we sold those on account. So it didn't say someone wrote us a check, or didn't say anyone gave us cash. We sold those services on account. So that is accounts receivable. When we have a sale and someone's going to pay us later, they're going to give us that money later, that's accounts receivable. So accounts receivable is going to go up 600. Again, opposite sides of the accounting equation. So our capital went up, accounts receivable went up. So let's kind of take a look and see where our balances are. We're going to do this one of two ways. Are we in balance going across for each transaction? So you're going to put an equal sign, and we're going to add let me see if it'll let me do it this way. We're going to add all these accounts, assets, and then we're going to subtract. I bet I have to put maybe a parentheses around those. We're going to add all these up, and then we're going to subtract the opposite side, liabilities and owner's equity. Okay, and that did not work. So a little bit different than Excel. I'm going to go one by one. So we're going to add our assets. So I'm just going to add these across. There may be another way to do this, but and then we're going to subtract our liability, subtract our owner's equity. Okay, so our net effect to show that we are in balance should be 0, and it is. You've entered that there. If you drag your cursor there, you can copy down. If we're in balance, they should be 0 all the way to across. Let's see why that one didn't end up being. We got to subtract. This should be. There we go. I got it. I don't know why that formula was off. And this again should be. There we go. So we're in balance. We've got zeros all the way across. And so the next thing we want to do is we want to find out what are our new balances after all these transactions. And that's really easy. All we need to do is we can do a sum. So use the sum, highlight all the way up. So our new cash balance is 12,400. We should be able to drag that formula all the way across. Those are all your new balances for those accounts after this group of transactions. And again, we should be able to copy that formula there. And the fact that we have zeros here shows that we had the right amount and the right increase or decrease going to each account. So you're going to pretty much do the same thing that I just demonstrated here for 3.8 and 3.9. So if you get stuck, Mr. Skirvin and I can help you in class. And you can also go back to what I just showed you here.